Pay less tax in Nigeria. Yes, you can now pay less tax in Nigeria by simply harnessing the over 110 tax incentives in the new Nigerian Tax Act. Let's show you how. Dear friends, yes, you can now pay less tax in Nigeria. It is now very possible. All you need to do is just harness the over 110 tax incentives in the new Nigerian Tax Act of 2025. Interestingly, the tax authorities identified only 51 tax incentives, but Tax Corp identified 110 tax incentives, and we will avail them to you here. So today, you can really reduce your tax significantly by legal and ethical means and procedures, simply by harnessing the over 110 tax incentives in the new Nigerian Tax Act. Consequently, please never get involved in tax evasion. It is criminal, it is unethical, it is sinful, and robs our government of the valuable funds and resources they need to govern well and provide common amenities for our common good. Yes, that is the essence of government and governance. And any government that fails to provide common amenities for the common good of each society, country, nation, province, region, or state has failed. Tax payment is your civic duty and responsibility, and you should endeavor to honor it. And you can significantly pay little or no tax by hugely and innovatively harnessing the over 110 tax incentives in the new Nigerian Tax Act, which were professionally crafted by the Presidential Committee on Tax Reforms. The new tax acts are very good, modern, equitable, progressive, compassionate, comprehensive, simple, investment friendly, and should be supported by every Nigerian and non-residents. I say this because in my over 36 years of professional tax practice, this is best attempt and result we have had in modernizing, consolidating, unifying, and globalizing our almost antiquated tax laws. And this is why the Presidential Committee on Tax Reforms, led by Mr. Taiwo Oyedele, and the Nigerian Revenue Service, led by Dr. Zach Adedeji, should be highly commended and applauded. They did a fantastic work. In this video, you will learn a lot, including the golden rule of tax freedom, format for computing income tax, and therefore how to use the format to harness the over 110 tax incentives and pay less tax. So what do you do? Simple, just follow us attentively to the end of this video. In addition, we'll be releasing more videos. And to get the videos hot and fresh, kindly like, subscribe, hit the notification button, and share to as many people as possible. And let us know also what you think of videos and how they are educating and helping you. So what are you going to learn in this compass of video? You are going to learn the following: the golden rule of tax freedom, better understanding of tax incentives, who can benefit from tax incentives, format for computing income tax, explanation of the format for computing income tax, persons expressly exempted from taxes, persons whose profit or gains are exempt from taxes, exempt incomes from tax, exempt retirement gains and gifts, exempt gains on disposal of shares, exempt gains on compensation, exempt gains on personal assets, the golden rule of expense deductibility, additional deduction of 50% of salary, approved bodies for allowable deductions, for allowable donations, loss relief and capital allowance, eligible deductions for individuals only, release for double taxation, withholding tax, and VAT, exempt instruments from stamp duties, exempt supplies from VAT, taxable supplies charged at 0%, items on which VAT is suspended, deduction for research and development, economic development tax incentives, some tips for harnessing tax incentives, the list of the 22 interdependent compasses of videos about tax corp and the authors. Now, the golden rule of tax freedom. Dear friend, do you want to be free from tax wahala? No disturbance of your sleep by a taxman, no knocking at your door by a tax lady, no receipt of long queries by your business from a tax controller, no receipt of unsolicited reminders or threats by your company, no blocking of your bank accounts by the tax chairman, no debiting of your bank account at the directive of a tax authority, no barging into you or your business by law enforcement officers, no forceful entry into your business premises by tax officers and law enforcement officers, no threat of imprisonment by a law court, no selling of your business or its assets without a court order after the tax has become final and conclusive by the Nigerian Revenue Service. Dear friend, if your answer to the above compound question is a capital yes, then obey the golden rule of tax freedom. And you ask, what is this golden rule of tax freedom? I will tell you, it is called the three C's. And the three C's are comply, comply, and comply. Now, a better understanding of tax incentives, you need this. Tax incentives comprise all the measures. Please pay attention for a clear understanding of tax incentives. Tax incentives comprise all the measures, exemptions, allowances, reliefs, suspensions, delays, reductions, waivers, official support, holidays, exchanges, and other arrangements put in place by the Tax Act to enable taxable and non-taxable persons benefit hugely from the provisions of the Tax Act, including upscaling their business, paying little or no tax or paying a fair tax, and generally complying effectively and efficiently with the Tax Act. It is incredible. We identified over 110 tax incentives in the new Nigerian Tax Act, which you can hugely harness to pay little or no tax or pay a fair tax as a responsible individual or corporate citizen of Nigeria. However, we always advise individuals and corporate bodies to pay tax, no matter how small. For tax is a civic responsibility and not punishment. It's not a punishment or levy. Indeed, we define tax as follows. Please pay attention of our definition of tax. Tax is an obligatory contribution which members of a society agree to make to the common purse of the society to be utilized by the representatives of the society who are voluntarily chosen by members of the society to provide common amenities for the common good of the society. Who can benefit from tax incentives, you will ask? Beneficiaries of tax incentives cut across all tax stakeholders, and they include employees, whether public or private employees and civil servants, they can benefit. Self-employed individuals, including business owners, sole traders and market traders, businessmen, businesswomen, enterprises, partnerships, joint ventures, unincorporated persons, families, estates, trusts, and settlements, limited liability companies, what you call private or public limited liability companies, public liability companies, PLCs, quoted companies, unquoted companies, specialized companies, shipping, airline, etc., insurance, non-taxable persons, NGOs, etc., government and their MBAs. All these persons can benefit from tax incentives. Format for computing income tax. Now, for you to be able to harness tax incentives, you have to know how tax is computed. Here, we show you a summary table on how to compute tax, and in the next slide, we'll explain how it works. So, here on this table, we will have 5 columns and we'll have 13 line items. So, the 5 columns are serial number, subject, section of Nigerian Tax Act, that's the third column. The fourth column is company format, and the fifth column is individual format. So company format here, we're using some figures just to explain to you, show you examples of how it works, and you also have individual format. So in the second column where we have subjects, we will just tell you the line items and the section of the Nigerian Tax Act where it is discussed, so you can also make references. So the first line item in computing income tax of either a company or an individual is gross turnover. So this is regulated by Section 4 and Section 20 of Nigerian Tax Act. So when you deduct allowable expenses from gross turnover, what you have is profit stroke loss before tax. Please note that allowable expenses are regulated by sections 20 and 21 of Nigerian Tax Act. So when you come to profit or loss before tax, the next item that you will remove is loss relief, which is regulated by section 27 and section 28 of Nigerian Tax Act. And once you do that, you will have what the law calls remainder of accessible profit, which is regulated by paragraph 22 of the first schedule to the Act. Next, you remove capital allowance, which is also regulated by sections 27 and 28. And once you do that, you have total profit or income, which is also regulated by sections 27 and 28. At this point, for companies, you stop. For company taxation, you stop because you now apply the tax rate, either 30% or 0%. But for individuals, you have to continue because the next line item is called eligible deductions. So from total profit for individuals, you less eligible deductions, which is regulated by section 30, subsection 2 of the Act. And once you do that, you have chargeable profit or income. Then on that, you will now multiply your tax rate, which is for individuals, is graduated. So the approved tax rate is regulated by Section 36 and the fourth schedule. So for companies, you can see that your total profit is the same thing as your chargeable profit and the same thing as your taxable profit. But for individuals, chargeable profit is the same thing as taxable profit or income. So once you apply the approved rate, you have your computed tax liability, which is regulated by section 56 and the fourth schedule. Then the line item 12, you have tax deducted as source, so which is regulated by section 51. And once you remove that from your computed tax liability, you have the next tax payable. Now let's explain to you this format in more details. To reduce your tax or pay less tax in Nigeria, you have to first of all know how tax functions in Nigeria. You have to know how tax is computed. You have to know the format for computing tax. For it is only then that you can now know what to increase and what to reduce legally and ethically. You have to know the structure, contents, and flow of the format for computing tax. We will show you how that is done with respect to the Tax Act. So let's start with the first line item, which is gross turnover. The first item in the computation of the income tax of a company, enterprise, business name, individual, employee, sole trader, partner, etc. is gross turnover. Sometimes people call it gross revenue. Some people call it gross income. Please note the qualification here, which is gross, not net or just turnover or just revenue or income, but gross turnover, gross revenue, or gross income. So, what is gross turnover, gross revenue, or gross income? Section 3 of Nigerian Tax Act 2025 states that income tax is imposed on the following three types of income. Number one, profit or gains of any company or enterprise. Number two, income of any individual or family, and income arising, occurring, or due to a trustee or an estate. Section 4 of Nigerian Tax Act 2025 lists 11 broad types of chargeable income, profits or gains of a person. That is, when you say a person, member, we're talking of either a company, enterprise, business name, or an individual. Section 20 of Nigerian Tax Act states that to ascertain the profit or loss of a person, please pay attention, from a trade, business, profession, or vocation, you have to deduct all expenses incurred wholly and exclusively in the production of the income for that period. This means that profit or loss equals gross turnover less all expenses. And graphically, you can see here, profit or loss equals gross turnover minus all expenses. The next item is allowable expenses. The next item on the tax computation format is allowable expenses. Allowable expenses are expenses allowed, permitted, or approved by the Tax Act to be deducted from gross turnover, gross revenue, or gross income in arriving at profit or loss. Section 20 of NTA 2025 deals extensively with them. Now, please pay close attention here. Since you arrive at profits on which tax is calculated by deducting allowable expenses from gross turnover, it follows therefore that for you to legally and ethically reduce your tax, you have to legally and ethically increase your allowable expenses. For a deep on this, please watch our video titled Reduce Tax, Increase Deductions Allowed Legally, where we dealt extensively with this matter, including the golden rule of deductibility of expense. Next is non-allowable expenses, which is part of allowable expenses. Please note that. Also dealt extensively in the video is the flip side of the allowable expenses, which is non-allowable expenses, non-deductible expenses. Non-allowable expenses are expenses which are not allowed, permitted, or approved by the Tax Act to be deducted from the gross turnover, gross revenue, or gross income in arriving at profit or loss. They are disallowed in computing the profit or loss of a person. Section 21 of the Nigerian Tax Act 2025 deals extensively with them. Similarly, you are you arrive at profits on which tax is calculated, right? By not deducting non-allowable expenses from gross turnover. It therefore follows that for you to legally and ethically reduce your tax, you have to legally and ethically decrease your non-allowable expenses. Again, please watch our video titled Reduce Tax, Increase Deductions Allowed Legally, where we dealt extensively with this matter, including the golden rule of deductibility of expense. So the next item is loss relief. The next item on the tax computation format is loss relief. Section 27(1) of Nigerian Tax Act 2025 states that the total profits of a company shall be its total accessible profit from all sources, less loss relief and capital allowance. Section 28(2) as loss relief as part of total deductions to be made in the computation of the income of an individual. So please note that while Section 27 says that for you to arrive at the total profits of a company, you have to deduct loss relief and capital allowance. Section 28, on the other hand, makes it part of the total deductions you have to make to arrive at the income of an individual. And please watch this. Section 27 and 28 state that unrelieved loss, please pay attention here now. Let me repeat this. And please watch this again. Section 27 and Section 28 state that unrelieved loss shall be deducted as far as possible from accessible profit of a company or individual respectively, and where not fully relieved, shall be carried forward to subsequent years until it is fully relieved. This is a massive tax incentive for you to take calculated investment risk for the purpose of profitability and growth. And where the risk results in a loss, the tax act is there for you. And the more you incur loss on calculated investment risk, the more loss relief that the tax act grants you and the less tax you pay. There is no limit to the loss that you can deduct. To know more on how you can harness loss relief to pay less tax, please watch our video on it titled Loss Relief and Capital Allowances Nigeria. You can now offset all losses and so on. Capital allowance. The next item on the tax computation format is capital allowance. Section 27(2) of NTA states that the total profits of a company shall be its total accessible profit from all sources less loss relief and capital allowance. Section 28(2) as capital allowance as part of deductions to be made in the computation of the income tax of an individual, similar to loss relief. And again, please watch this. Paragraph 22 of the first schedule to NTA 2025 state that unabsorbed capital allowance shall be deducted as far as possible from the remainder of accessible profit of a company or individual, respectively, and where not fully absorbed, shall be carried forward to subsequent years until it is fully absorbed. Again, this is a massive tax incentive for you to acquire and use adequate buildings, plant, machinery, motor vehicles, equipment, furniture, and other capital expenditure in your business, and where you are unable to absorb them in years, the Tax Act permit you to absorb them in subsequent years until they are fully absorbed. And the more you spend on capital expenditure, the more capital allowance the Tax Act grants you and the less tax you pay. To know more on how you can harness capital allowance to pay less tax, watch our video on it titled Loss Relief and Capital Allowances in Nigeria. You can now offset all losses, absorb all capital allowances, and so on. Eligible deductions. The next item on tax computation format is eligible deduction. This item applies only to the computation of income tax of an individual and does not apply to incorporated companies. Section 32 of NTA lists the 6 deductions that constitute eligible deductions. They include contributions to National Housing Fund, contributions to National Health Insurance Scheme, and contribution to pension. Then loan interest on owner-occupied residential house, premium on your life or that of your spouse, and rent relief of 20% of annual rent paid up to a maximum of 500,000 naira. Note Not only are these deductions good, please note this. Not only are these deductions good and impact well on your life, they enable you to pay less tax. So hugely harness them by hugely investing in them to create good returns for you and your family in the future. Deductions at source. The next item on the tax computation format is deductions at source. Section 51 of NTAA 2025 deals extensively with deductions at source, which is also called withholding tax. There are 2 types of deduction at source, and they are deductions at source that crystallize as final tax, and deductions at source that crystallize are deductions from further tax. Whilst the whole amount of income of which a deduction at source that crystallizes as final tax is disclosed and deducted wholly from accessible income. Deduction at source that crystallizes as deduction from further tax is deducted from computed total income tax, and that is the one we are mentioning here. So when a payer, customer, or client deducts or withholds part of your income, that is not a loss. You do not lose anything. You do not lose the income, and you do not lose the money, because it is treated as an advance payment of income tax by you, which you will now utilize at the end of the year by deducting it from your computed total income tax. Withholding tax is not a loss. It is an advance payment of tax by you. Persons expressly exempt from certain taxes. Persons who earn no income. Please watch this. These are persons who are expressly exempt from taxes in Nigeria. First, persons who earn no income, derive no income, and do no business in Nigeria, and bring no income into Nigeria are exempt from paying income tax and development levy. But please note that they are subject to other taxes such as VAT, withholding tax, etc. Small companies of annual gross turnover of 50 million naira or below with total fixed assets of 250 million naira or below pay no income tax. They are taxed at 0%. However, the Nigerian Revenue Service and the National Assembly of Nigeria still need to clarify the threshold, whether it is 50 million naira or 100 million naira. We are waiting for the Nigerian Revenue Service to give us guideline on implementation so that they will confirm whether the threshold is 50 million naira or 100 million naira for small companies. The same with small companies of annual gross turnover of 50 million or below with total fixed asset or below pay no development levy. Again, we are waiting for clarification on the threshold, whether it is 50 million naira or 100 million naira for what do you call it, for small companies. But like we just said, Small companies of annual gross turnover of 50 million or below with total fixed assets of 250 million or below pay no income tax and pay no development levy. Small businesses of annual gross turnover of 100 million or below with total fixed assets of less than 250 million are exempt from charging, collecting, paying, and remitting VAT. So if you're a small business of 100 million naira and below, you don't have anything to do with VAT. Nobody will charge you VAT and you won't charge anybody VAT. When somebody charges you VAT, you can claim that from government. Businesses with annual turnover of 12 million naira or below are exempt from paying presumptive tax of 1%. And please, let's mention here that this is for the informal sector. There is a new regulation signed by the minister on presumptive tax of 1%. Persons whose profits or gains are exempt from tax. The profit or gains of the following persons are exempt from tax so long as the profit or gains are not derived from a trade or business carried on by such a person. A person engaged in educational, religious, or charitable activities of a public character. A cooperative society registered under any enactment or law relating to cooperative societies. A statutory or registered friendly society. A trade union registered under Trade Union Act. A federal, state, or local government in Nigeria, their ministries, departments, and agencies, and other public institutions. A government purchasing authority established by an enactment and empowered to acquire any commodity for export or retribution. Like we said, the profit or gains of these persons are exempt from tax so long as the profit or gains are not derived from a trade or business carried on by them. Now, exempt incomes from tax. Incomes that are also exempt from tax. Dividend distributed by authorized collective investment scheme. Dividend or rental income received by a real estate investment company on behalf of its shareholders, where not less than 75% of the dividend or rental income is distributed within 12 months after the end of the financial year in which the dividend or rental income was earned. Compensating payments, which qualify as chargeable dividends received by a lender from its approved agent. Compensating payments, which qualify as chargeable dividends or interest received by an approved agent from a borrower or lender. Pension funds and assets created pursuant to the Pension Reform Act. Pension, gratuity, or any retirement benefits granted in accordance with the Pension Reform Act. Wound and disability pensions granted to members of the armed forces of any recognized national defense organization or to a person injured as a result of an enemy action. A sum received by way of death gratuities or as consolidated compensation for death or injuries. Redundancy lump sum payment and other compensation of capital nature for loss of employment. Gains accruing from disposal of assets by an angel investor, fantastic people, venture capitalists, private equity fund, accelerators or incubators with respect to a labeled startup. Income from bonds issued by state or federal government of Nigeria. Emoluments of any person serving as other rank. Emoluments of personnel serving in combat zones or hazardous areas. Income generated by companies engaged in agricultural businesses. The profits of any Nigerian company in respect of goods or services exported from Nigeria, if the proceeds of such exports are repatriated through official channels. Dividend received from investment in wholly export-oriented businesses. Dividend, interest, rent, or royalty received from outside Nigeria and brought into Nigeria through approved channels. Profits of a company engaged in sporting activities. Income of an employee who earns the national minimum wage or less. Wages and salaries of military officers. Exempt chargeable gains arising from retirement schemes and gifts. The following gains do not constitute chargeable gains and therefore are tax exempt. Gains accruing to pension funds and assets approved under the Pension Reform Act. Gains accruing to an individual from disposal of investments held as part of any national provident fund or other retirement benefit schemes. established under the provisions of any act or enactment for employees throughout Nigeria. Gains on disposal of gifts for bravery are tax exempt. Gains on disposal of decoration awarded for valor or gallant conduct with which a person acquires otherwise that for consideration in money or money's worth. Exempt chargeable gains on disposal of certain shares. Please pay attention here again. To encourage investment by Nigerians in Nigerian companies, some gains from investment in shares in Nigerian companies are exempt from tax. Specifically, the Act provides that gains that accrue to a person from disposal of shares in any Nigerian company are exempt from tax where the disposal proceeds in aggregate are less than 150 million naira, and the chargeable gain does not exceed 10 million naira in any 12 consecutive months. The shares are transferred between an approved borrower and a lender in a regulated securities lending transaction. The proceeds from such disposal, notwithstanding the 150 million naira or 10 million naira thresholds, are reinvested within the same year of assessment in the acquisition of shares in the same or other Nigerian companies, provided that tax shall accrue proportionately on the portion of the proceeds which are not reinvested in the manner stipulated by the Tax Act. Exempt chargeable gains on certain compensations and life assurance policies. Any gain that arises from the compulsory acquisition of land of a person by an authority is tax exempt, except where the person solicited for such acquisition. Any gain that arises from the disposal of a life assurance policy by the assurer is tax exempt, except where the disposer is not the initial owner of the life assurance policy. Sums not exceeding 50 million naira received by an individual as compensation for loss of office or employment, wrong, injury for libel, slander, or tax exempt. Are tax exempt. I take that again, please. Sum not exceeding 50 million naira received by an individual as compensation for loss of office or employment, wrong, injury for libel, slander, are tax exempt. Exempt chargeable gains on disposal of certain personal assets. The following gains of individuals are exempt from tax. Gains arising from disposal of a dwelling house or part thereof. Disposal of land immediately adjoining the dwelling house up to a maximum of 1 acre. Gains arising from disposal of personal chattels, being tangible movable property where the total amount of value of the consideration for the disposal does not exceed 5 million naira or three times the annual national minimum wage, whichever is higher. Gains arising from disposal of one or two private vehicles. Gains arising from disposal of an asset as a gift, which itself was acquired by way of a gift. Gains arising from disposal of an asset as a gift, which itself was acquired by way of gift. The golden rule of expense deductibility. Dear friend, tax is not imposed on gross turnover. Tax is not imposed on gross revenue, and neither is tax imposed on gross income. Rather, it is imposed on the balance of gross turnover, less all deductibles. A major component of these deductibles are expenses, and they are only deductible when they pass the golden rule of deductibility of expense. And what is this golden rule? We'll show you here. The golden rule of deductibility of expense is that in ascertaining the profit or loss from a trade, business, profession, or vocation, all expenses which were wholly and exclusively incurred in that period in the production of the income shall be allowed as deductions in arriving at the profit or loss. This is also called the deductibility criteria. The more you understand and apply this deductibility rule, the less tax you pay. And if you have issues on deductibility of or any tax matter with any tax authority, you cannot pay a tax consultant or you cannot pay a lawyer to deal with the issue. You can take the matter to the newly created office of the tax ombudsman to deal with you for free. And please watch our video on deductibility of expense where I think that video is reduce tax, increase deductions allowed legally. Additional deduction of 50% for salary increases and employment of more staff. A company shall be entitled to an additional deduction of 50% in the relevant years of assessment in respect of cost incurred in any 2 calendar years from 2023 to 2024 on the following: wage award, salary increases, transportation allowance, or transport subsidy granted to a low income earner, which bring the gross monthly remuneration of the worker up to an amount not exceeding 100,000 naira, provided that any additional award or salary increase to an employee earning above 100,000 as monthly salary shall not qualify for the additional deduction under this subsection. And salaries of any new employee constituting a net increase in the average number of new employees hired in 2023 and 24 calendar years over and above the average net employment in 3 preceding years, provided that such new employees are not involuntarily disengaged within the period of 3 years post-employment. Now, approved bodies for allowable donations. The new Tax Act are not against making helpful donations to the needy. Indeed, they encourage donations. The only thing is that donations have to be proper. As a responsible corporate citizen, your company can make donations to the underlisted funds, bodies, and institutions. And please note that the Act permits only companies to make allowable deductions, meaning as an individual, you cannot make donations, even to the approved bodies. See Section 164 of the Nigerian Tax Administration Act. The approved funds, bodies, and institutions to which a company can make allowable donations are public funds, statutory bodies or institutions, religious, charitable, educational, and scientific institutions established in Nigeria, bodies recognized under the Diplomatic Immunities and Privileges Act, any pandemic, natural disaster, or other public emergency interventions. Loss relief and capital allowance tax incentives. You can now forward unrecouped losses to eternity, no more limit. You can now forward unrecouped capital allowances to eternity, no more limit. You can now absorb all your calculated capital allowances in 1 year of assessment if you have sufficient profit, no more restriction. Capital allowance system now aligns with accounting depreciation system, as you now have only one rate per annum, no more initial allowance. Loss relief and capital allowance tax incentives are very, very important because you can now carry forward on relief loss. You can relieve everything if you have the accessible profit, and where you don't have, you can carry forward to eternity your loss relief or capital allowance. This is massive. Eligible deductions for individuals only, please. The following deductions are allowed as eligible deductions in the computation of the chargeable income of an individual. They are contributions under the National Housing Fund, contributions under the National Health Insurance Scheme, contributions under the Pension Reform Act, interest on loans for developing an owner-occupied residential house, life assurance premium or annuity on the life of the individual or their spouse, rent relief of 20% of annual rent paid subject to a maximum of 500,000, which is whichever is lower, provided that the individual actually declares the actual amount of rent paid. Release for double taxation, withholding tax and excess input VAT, where the income or part or profit of a resident in Nigeria derived from outside Nigeria has suffered tax in the source country. The tax paid outside Nigeria shall be allowed as a credit against the tax payable in Nigeria. A tax doesn't assault except where stipulated as final tax is regarded as advance tax paid by the person from whom it was deducted and for which the payer could use to set off against any income tax. Tax paid by a person to whom a taxable supply was made is known as input VAT and for which the payer will use to set off against any output VAT. Where input VAT exceeds output VAT, a taxable person shall be entitled to refund of the excess VAT. A person whose supplies are chargeable to VAT at 0% shall be entitled to refund of the input VAT paid on taxable supplies they consumed. They are very good. These are very good tax incentives introduced by the new Nigerian Tax Act. And this is one of the reasons why we say the new Nigerian Tax Act should be supported by all Nigerians and non-residents. Exempt instruments from stamp duties. The following instruments, among others, are exempt from stamp duties. All documents relating to the transfer of shares and stocks, electronic transfer or electronic receipts of money of a sum below 10,000 naira or its equivalent in other currencies, electronic transfer for salary payment, interbank self transfers, transfer between branches or between branches. So let's make this again. Intra-bank self-transfers, transfers between branches or between branches of an individual or a company as an account holder. Any instrument for sale or transfer by way of mortgage or otherwise of any ship or vessel. Any instrument executed by or on behalf of a cooperative society registered the under any act or law. So please, these instruments are exempt from stamp duties. We have listed them here. Exempt supplies from value added tax. But first, some clarification on certain things. VAT exempt means that the supplies are not within the VAT system. No charge, no collection, no pay, no remittance, and no claims. But zero rated VAT means that the suppliers are within the VAT system, the VAT rather, but you cannot charge, collect, remit VAT, but you can pay input VAT and claim refund. The following suppliers, among others, are exempt from VAT. Oil and gas exports, crude petroleum oil and feed gas for all processed gas, goods purchased for use in humanitarian donor funded projects, baby products, locally manufactured sanitary towels, pads, or tampon, military hardware, arms, ammunition, and locally manufactured uniforms, shared passenger road transport service, purchase, hire, rental, or lease of agricultural equipment such as tractors, supplies consumed by an approved entity in the export processing zones (EPZ) or free trade zones (FTZ), goods or services supplied to diplomatic missions or diplomats, plays and performances conducted by educational institutions as part of learning, land or building, including interest in land or building, are not vatable, money or securities, including interest in money or securities, government licenses, are not vatable, assistive devices and disability-related products, including hearing aids, wheelchair, etc., are not vatable. Taxable suppliers charged to VAT at 0%. The following taxable suppliers among us are charged to VAT, but at 0%. They are also called zero-rated VAT suppliers. Basic food items, meaning that you can have more babies. All medical and pharmaceutical products. All medicinal herbal products. Educational books and materials, so you can go to school more. Fertilizers for agriculture, yes. Locally produced agricultural chemicals. Locally produced veterinary medicine. Locally produced animal feeds, good for agriculture. Live cattle, goats, sheep, and poultry. Nama, cow is not vatable. Agricultural is vatable but at 0% payment. Agricultural seeds and seedlings. Electricity generated by generation companies, GENCOs, and supplied to the national grid or MBED, that's Nigerian Bulk Electricity Trading Company. Electricity transmitted by the Transmission Company of Nigeria, TCN, to Electricity Distribution Company, DISCOs. Medical services, school fees at all levels, tuition relating to nursery, primary, secondary, or tertiary education, not vatable. They are taxed at 0% or at 0%, yes. Exported goods, excluding oil and gas, exported services, exported incorporeal, incorporeal property, medical equipment, incorporeal property, please, medical equipment, electric vehicles, electric vehicles parts, semi-knockdown units for assembly of electrical vehicles. Items on which VAT is suspended or delayed. The following items are suspended or delayed for now, and they are petroleum products, renewable energy equipment, compressed natural gas, liquefied petroleum gas, other gaseous hydrocarbons. These items, VAT on them is suspended or delayed for now. Economic development tax incentives. Nigeria has always encouraged investment in Nigeria with such incentive schemes as the Pioneer Status Incentive (ESI). However, from unpleasant experience in discouraging prior blanket and open-ended tax incentive systems, the NTA 2025 abandoned such large and open-ended tax holidays that yielded minimal revenue to the government in favor of measures that tie incentive claim to real capital investment, measurable economic activity, and verifiable outcomes. Thus, the bait of Economic Development Tax Incentives (EDTI). The Economic Development Tax Incentive (EDTI) introduced under the new Nigerian Tax Act is a performance-based, credit-driven tax incentive system designed to attract investment into strategic sectors like agriculture, manufacturing, and technology. It replaced the old Pioneer Status Incentive PSI by offering a 5% annual tax credit on qualifying capital expenditures for up to 10 years, contingent on investment performance. It is administered by the Nigerian Investment Promotion Commission (NIPC), and you can obtain details from them. Some tips on how to harness the over 110 tax incentive in the new Nigerian Tax Act for the purpose of paying less tax. Dear friend, you have seen that the new Nigerian Tax Act taught so much about you, how you can bear less tax burden, grow in your employment or grow in your business. And for this, they provided so many tax incentives which you can harness to pay little or no tax or just evade tax as a good citizen. Obviously, you do not have to dodge or evade tax. Just apply the tax incentives and you'll feel good. And the good news is this: Tax Corp has comprehensively and meticulously dissected, articulated, explained, and illustrated the entire Tax Act into various interdependent compasses called NTC or videos. See the list in the next slide below. So, my friend, go ahead and enjoy yourself by choosing and watching task force videos on any subject matter that is of interest to you. Please have fun as you do not come to this world twice. Let us know, let us now look at some specific tips on how you can hugely harness the numerous tax incentives in the new Nigerian Tax Act. Please pay attention here. First of all, know your tax law well, particularly as it relates to tax incentives. Not just your tax consultant or tax group. You also have to know your tax law well. Deeply and clearly understand how tax incentives work. Be proactive, plan your tax matters ahead. Maintain a comprehensive register of tax incentives. Claim tax incentives timely and accurately. It is not given to you just like that. You have to claim it. Know and understand your legal status well. Know your relevant tax authority. Pay close attention and complete the tax incentive requirements correctly. Plan all year round, not just at tax time. Most importantly, consult and stay with tax corp for all your tax matters. Dear friend, here are the 22 interdependent compasses for tax subjects. All you need to do is go through the list and pick the one you want and go and watch a video. And if for any reason you want there's no video for a particular tax subject you want, please contact us through any of our contact channels and we will deal decisively with your desire. So, a little bit about TaskCorp and the principal consultant. TaskCorp is a Nigerian tax consultancy firm which specializes in tax matters. Prince Chid, FCA, FCTI, MBA is the principal consultant. Prince Chid is a licensed fellow of the Institute of Chartered Accountants of Nigeria, ICAN. and the Chartered Institute of Taxation of Nigeria. Tax Corp and Prestige have provided tax services to numerous individuals and corporate bodies in both the public and private sectors, locally and internationally, since 1990. The beneficiaries include Nigeria Revenue Service, formerly the Federal Inland Revenue Service, Revenue Mobilization Allocation and Fiscal Commission, RAMFAC, State Internal Revenue Service, such as Lagos State, Abia State, Enugu, Kano, Federal Capital Territory Internal Revenue Service, FCTRS, and many private companies and individuals. Here are some of our contact channels, and you can use any of them to contact us: YouTube, TikTok, Facebook, phone numbers, email, and other channels. And please always pay attention to tax needs so that you don't pay penalties unnecessarily. Thank you.